All right, welcome back to the Retirement Unbroken Show. I am Merrit Strunk, and we're talking about different tax class diversification in your assets, your retirement accounts, your 401k, Roths, traditional IRAs, and we just ran through a lot of different details about those things and why it's so important. And we just left off about the Roth IRA and how important it is, depending on what your compensation is, because you've got to get it and fund it with W-2 while you're below the income thresholds, because you want to have a catcher's mitt open for potentially what's called a backdoor Roth conversion. So if you've got traditional IRA or tax deferred type of money in a 401k traditional or an IRA traditional, and you retire and you've got all this money that's never been paid taxes on. And like I said, remember the IRA tax trap that I just talked about? Taxes upon tax, but it's upon taxes. You take the money out, pay the taxes, and so on. One way to get around that is what's called a backdoor Roth conversion. The only catch is you got to have money on the outside, an investment account or in the bank, to pay the taxes at your current tax rate. It's not an all or nothing, by the way. You don't have to convert everything. You can strategically structure separate annual Roth conversions, so that, guess what? Those can grow and you could take tax-free income. Nobody's going to force you to take RMDs out of it. And think about your legacy. You've got children and you are legacy minded. Some people are, some people aren't. Then guess what? That money all goes to your heirs and your legacy, and there's no taxes on those things. Wonderful. How considerate are you that you did that? Okay. So as we talked about Ross, that's tax-free. Now we're going to talk about life insurance. There's all kinds of things about life insurance, but when it comes to thinking about tax-free retirement income, there are very few sacred cows in this country that the government hasn't come for to tax you on. They are talking about it, but currently it's not in place. That Ross, tax-free income, and there's a way that you can use life insurance to fund tax-free income if it's done correctly. By the way, here's a term. It's an acronym. It's called LIRP. LIRP. It's LARP. It's called Life Insurance as a Retirement Plan. And by the way, very wealthy individuals and people who are familiar with the ins and outs of life insurance are aware of this. How'd you like to have tax-free retirement income for the rest of your life? And some other benefits. Those are the living benefits of life insurance. So those type of life insurance policies are not for people who, if you've been promoted off this planet, and the people who are taking the death benefit, it's not for them. It's for you. And it can actually do both. So let's get into this conversation about life insurance. You're all familiar with certain types. Like term is a big one. So the question is, which one's right for you? So life insurance is about, in general, it's about supporting your family when you are no longer here. So good for you if that's what you've done. In general, while you're younger, prior to 65, you are insuring what? You're insuring income and the potential loss of income if that person is no longer here. So let's say one of the spouses makes higher income and one of them makes either lower or doesn't work, stays home. Well, what if something happens to that person? And there's two types of calculations we do, which is one, we bump you off right now. The worst possible time is right now. You go out and get that milk and you don't return home. This is San Diego. That happens with more frequency than you know. It does happen. So then you have to say, well, if that does happen, that's the worst possible outcome. What happens to, and I'm just going to give a scenario, what happens to mama and the kids? Are they out of the house? Do they have to sell the house? Will the children get education? Are the debts going to be paid off? Is the mortgage going to be paid off? Is the car loan going to be paid off? How about that credit card debt when the income is no longer coming in? So that's the conversation about life insurance. And have you done your planning? And men, I'm going to call you out here. Have you done that for your spouse? And why not? Why? This is part of your role to make sure mom is okay and the kids are okay. So if you haven't done that, stop procrastinating. Give us a call. Go to our website. give us a call, 858-521-9700. Okay. So depending on what type of life insurance you choose, it can also give you extra income in retirement. I just said life insurance and extra retirement income. Kind of equate that in your head if you've never heard that before. So life insurance essentially is a contract with an insurer, right? A company. And you are the policyholder. So the contract solidifies a promise to pay a death benefit to the designated beneficiary when you pass away. And speaking of beneficiaries, do you have a contingent beneficiary? Is it going to a trust? That's an interesting conversation we have almost every single day. So, term life insurance, right? If you're a Dave Ramsey alkalite, which I do prescribe to Dave Ramsey's good old down home knowledge, there's not a lot that you can disagree with Dave Ramsey, by the way. A rational person would agree to most of his concepts versus a permanent life insurance, right? Term has a term to it up until a date versus permanent, it's forever for the rest of your life until you're not here. Okay. So it's just differentiated on how long you want and need for the policy to last. So if you only need a policy for a short amount of time, right, you might choose term life insurance. By the way, biggest bang for your buck. Small, affordable term policies. And you can pay a little bit of premium and get a big death benefit. By the way, men, ladies, if you are employed and you have a group benefits package, which almost everybody does that works for a company, that is the best deal going. So if you are, if you've got life insurance, go take a look. How much will it cost to get $150,000 of term, $200,000, $500,000 group term under your company's benefit package is going to be the best deal you can get. And if you can't, then get one on the outside as well, to make sure that it has enough coverage for you. And these term policies outside of the group, okay, not talking about work, because you leave work, you lose that policy. It's not portable. It doesn't go with you. The terms for life insurance go like this: 10 years of coverage, 20 years of coverage, 30 years of coverage. Okay, so permanent compared to permanent, the insurance lasts the entirety of the policyholder's life unless you stop paying premiums. These plans are more expensive because they are permanent. Okay. If you have mom and dad or grandma and grandpa, specifically the grandma and grandpa, and you are not listed as, or somebody is not listed as a interested third party where they get notified that something's going on with a policy, then I hate to say it, all the premiums that this person has paid, grandma, grandpa, or mom and dad, that they've paid goes poof. There is it's called lapsing the policy, and there is a period there where you can come back and get a reprieve. You're back into getting insured. But to keep that from happening, my recommendation for you, especially if you have a senior in the family, is talk to them about auto pay that bill. Auto pay that bill, and also have yourself as the third party, authorized third party, interested third party that can get notified if there's something that goes on with a policy. I have seen it. And let's say you've got somebody who's 80 plus years old. Maybe they've got cognitive diminishment, and all these premiums they paid go poof because they're the only one getting notified, and that policy is lapsed. Oy. The amount of premiums you paid for years and years and years and years and years and years is gone. And guess what? The legacy, the estate that the life insurance death benefit plays a role in is now gone. Please, please, please make sure those things are in place. If you're driving or listening to this and you're hearing me, and you know that mom or dad or grandma and grandpa have a life policy that, especially the permanent ones, right? That they've been paying on forever, and you are not, or there is no third party authorized on there, or it's not auto pay. Please talk to them about that. Do yourself a favor.